Apple, the tech giant known for its iconic iPhones and innovative products, has long been a symbol of technological prowess and market dominance. However, even giants can stumble. The company experienced a significant setback as its stock plummeted on January 16, 2025. This unexpected drop caught many by surprise, shaking the confidence of investors who have long seen Apple as a safe bet. The decline, a jarring 11% drop from its December peak, marked the company's worst performance since August of the previous year. This sharp fall was not just a minor hiccup, but a significant event that drew widespread attention. This sudden downturn sent ripples through the market, raising concerns among investors and analysts alike. The broader market felt the impact, with tech stocks across the board experiencing increased volatility. The driving force behind this decline? Weaker than expected iPhone sales, particularly in the crucial Chinese market. China, being one of Apple's largest markets, plays a pivotal role in the company's overall performance. The news of Apple's stock plunge reverberated through Wall Street, casting a shadow over the tech giant's typically stellar performance. Investors who had grown accustomed to Apple's consistent growth were left in a state of unease. The 11% drop served as a stark reminder that even the most dominant companies are not immune to market forces and shifting consumer trends. It highlighted the vulnerabilities that even industry leaders face in a rapidly changing market landscape. Analysts and investors quickly sought to dissect the reasons behind this decline, with many pointing to the softening demand for iPhones, especially in China, as a key factor. The competitive landscape in the smartphone market has become increasingly fierce, adding to Apple's challenges. This decline in stock price wasn't merely a blip on the radar, it represented Apple's most significant single-day loss in months. The magnitude of this drop underscored the market's sensitivity to Apple's performance and the broader implications for the tech sector. The company, accustomed to leading the pack, found itself trailing behind its tech counterparts, becoming the poorest performer among the top 7 tech giants in early 2025. This was a humbling moment for a company that has often set the benchmark for innovation and success. The once unstoppable momentum of Apple seemed to falter, leaving investors to grapple with the implications of this downturn and its potential long-term effects. As the market continues to evolve, all eyes will be on Apple to see how it navigates these turbulent times and whether it can reclaim its position at the top. China, a market of paramount importance for Apple's global ambitions, has emerged as a source of concern. The country, with its vast population and growing middle class, was once a beacon of hope for Apple, driving significant portions of its global revenue. However, recent trends have painted a different picture. Once a region of robust growth for iPhone sales, China witnessed a noticeable slowdown, contributing to Apple's stock woes. The slowdown wasn't just a blip. It was a sign of deeper, more systemic issues that Apple needed to address. Market research firm Canalys painted a stark picture. Apple's smartphone market share in China had slipped to third place in 2024, overtaken by domestic rivals Vivo and Huawei. This shift was not just about numbers, it was about a changing consumer sentiment and preference. The numbers told a compelling story of shifting market dynamics. Analysts pointed out that the Chinese market was evolving rapidly, with local brands innovating at a pace that even global giants like Apple found challenging to keep up with. Apple shipped 15% of the total 284 million phones sold in China in 2024, a decline of 17% year over year. This decline was a clear indicator of the intense competition and the changing preferences of Chinese consumers. This decline in market share highlighted the fierce competition Apple faced from Chinese brands that had successfully captured the attention and wallets of Chinese consumers. These brands were not just competing on price but also on innovation and features. The once dominant iPhone now found itself vying for attention in a market increasingly drawn to homegrown alternatives. These alternatives were not only more affordable, but also tailored to the specific needs and preferences of the local market. The reasons behind Apple's waning influence in China were multifaceted. It wasn't just about the price, it was about the entire ecosystem that Chinese brands were building around their products. Domestic competitors, armed with a deep understanding of local preferences and aggressive pricing strategies, had eroded Apple's market share. They were quick to adapt to market changes and consumer demands, something Apple struggled with. Moreover, the allure of the iPhone, once a status symbol among Chinese consumers, seem to be diminishing in the face of increasingly sophisticated and feature-rich offerings from Chinese brands. These brands were not only meeting, but often exceeding consumer expectations. The changing landscape of the Chinese smartphone market presented a significant challenge for Apple, forcing the company to reassess its strategies and seek ways to regain its lost ground. The road ahead was fraught with challenges, but also opportunities for reinvention and growth. Adding to the air of uncertainty surrounding Apple's future prospects were forecasts predicting a decline in iPhone shipments. This news came as a surprise to many, given Apple's strong performance in recent years and its reputation for innovation and market leadership. Ming-Chi Kuo, a renowned Apple supply chain analyst known for his accurate predictions, forecasted a 6% year-on-year decline in iPhone shipments for the first half of 2025. Kuo's insights are highly regarded in the tech community, and his latest forecast has certainly caught the attention of both investors and consumers alike. Kuo's projections, closely watched by investors and industry observers, hinted at a potential softening of demand for Apple's flagship product. This potential decline in demand could have far-reaching implications, not just for Apple, but for the entire tech industry, which often looks to Apple as a bellwether. Kuo's analysis, based on his deep understanding of Apple's supply chain and market trends, carried significant weight within the tech industry. His predictions are often seen as a reliable indicator of future market movements, and this latest forecast is no exception. His prediction of a 6% decline in iPhone shipments for the first half of 2025 sent ripples through the investor community, raising concerns about Apple's ability to maintain its growth trajectory. Investors are now closely monitoring Apple's next moves to see how the company plans to address these challenges. The anticipated decline, if realized, would mark a significant shift for a company accustomed to robust iPhone sales. Apple has long been a dominant player in the smartphone market, and a drop in shipments could signal a need for the company to rethink its strategies and product offerings. Further adding to the concern was Kuo's anticipation of a more pronounced drop in iPhone shipments in the second quarter of 2025. This suggests that the challenges Apple is facing may be more deep-rooted and complex than initially thought. This projection suggested that the factors contributing to the slowdown in iPhone sales were not merely temporary blips, but potentially indicative of deeper market shifts and evolving consumer preferences. The rise of competitive smartphone brands and changing consumer behaviors are likely playing a significant role in this trend. Apple, facing these looming forecasts, found itself at a crossroads, needing to adapt its strategies to navigate the changing landscape of the smartphone market. The company will need to innovate and possibly diversify its product lineup to stay ahead in an increasingly competitive market. In the world of sales, there really isn't a one-size-fits-all solution. Every strategy has its own set of challenges and opportunities. It's a complex landscape where adaptability and continuous learning are key. You see, success in sales often comes down to understanding your customer deeply and being able to pivot quickly when things don't go as planned. The evolution from smartphones to artificial intelligence has been nothing short of revolutionary. Just think about it. A few years ago, we were amazed by the capabilities of our handheld devices. Now, AI is transforming industries, driving innovation, and changing the way we live and work. This shift is opening up new possibilities and, of course, new challenges that we must navigate carefully. The tech sector is no stranger to market jitters. Volatility is almost a given in this fast-paced environment. But it's also where we see some of the most exciting trends emerge. From advancements in cloud computing to breakthroughs in biotechnology, staying ahead of these trends requires a keen eye and, well, a bit of courage to take calculated risks. As we look at the December quarter earnings, it's clear that some companies have managed to thrive despite the economic uncertainties. These results give us a glimpse into how businesses are adapting and what we might expect moving forward. Beyond the numbers, it's about understanding the strategies that have driven success and considering how they might evolve in the coming months.